You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive. This is your shortcut to getting genuinely well-informed, really cutting through all the noise to get straight to the insights that matter. Today, we're diving deep into our global markets and geopolitical briefing. It's a really rich source, paints an incredibly detailed picture of our complex world. Our mission, pretty clear. Extract the most important nuggets, the key takeaways from this material. We want to give you a crystal clear understanding of those intricate, sometimes really surprising connections between global finance, international trade, and the ever-shifting sands of geopolitics. You know, people often say everything's connected, but the sources today, they really drive that point home. A tremor in one corner of the globe. It's not just a headline somewhere. It's a ripple effect. It touches everything from, the price of your coffee to the quiet rooms where diplomatic strategies get hammered out. So we're going to pull back the curtain on those fascinating links, help you see the world with perhaps some new eyes. All right, so if the world truly is this interwoven tapestry, where do we find the threads under the most tension right now? Let's maybe start with the immediate pulse. What are the markets telling us, especially foreign exchange?
Okay, well, our briefing shows a definite firming of the dollar index. That's as U.S. markets came back online after the holiday weekend. Not really a huge surprise, I suppose. Traders are laser focused on upcoming data. You've got the ISM manufacturing report coming very soon, and then the big one, the non-farm payrolls report, that hits desks on Friday. Across the pond, the euro, it's actually slipped back below that 1.17 level. Everyone seems to be holding their breath for the eurozone flash inflation data. And sterling pulled back, bumped up against some resistance around 1.3550, and kind of remarkably showed barely a flicker of reaction to Prime Minister Starmer's minor cabinet reshuffle.
Interesting.
Yeah, and in Asia, the yen weakened. This is despite, Bank of Japan Deputy Governor Himino reiterating the idea of raising rates eventually in line with economic improvements, though he did add a note of caution about high uncertainty globally.
Right.
Down under, the Aussie and Kiwi dollars, they softened a bit. General cautious risk tone, some mixed local data. The yuan, though, its fix was set firmer, 7.1089.
Yeah, it's tempting to just see these as numbers moving on a screen as an isolated event. But the striking takeaway here is how deeply they're all intertwined with anticipation. It's all about what's next. We're seeing this dance, really, driven by expectations. Central bank policies, will the Fed cut? What's the Bank of Japan really signaling with that cautious tone? Then there's the market's hunger for that hard economic data, like the payrolls number. And overlaying all that is just the broader sense of global risk appetite. How confident are people feeling? That dollar firming up ahead of the U.S. jobs numbers, for instance. It's not just about the data itself. It's a bet, isn't it? A bet on what that data might mean for the Fed's next move. And by extension, the perceived health of the world's biggest economy. It's really the market collectively voting on confidence, or maybe a lack of it.
That's a great point. It's all about the narrative the market builds around the data. And what about sterling? That muted reaction to Starmer's reshuffle, does that suggest the market is just sort of looking past the political noise right now, focusing more on the fundamental economic picture, or something else?
I think that's exactly it, precisely. The market's indifference, especially to what's called a minor reshuffle, often means the big structural issues or opportunities just outweigh the day-to-day political stuff. For sterling, the market's probably far more worried about, sticky inflation figures, the Bank of England's rate cycle, the UK's broader growth prospects after Brexit, much more than who holds which particular cabinet post.
Right.
It's a sign of a mature market, perhaps, maybe a bit jaded, focused on those deeper economic currents. And that firmer yuan fix you mentioned. Well, it's officially set by the PBOC, the People's Bank of China. It often reflects a strategic goal. Maybe stabilizing, maybe even strengthening the currency, especially when you think about China's ongoing trade talks and, their efforts to project economic stability amidst some pretty mixed domestic data.
That makes a lot of sense. Okay, so from those really intricate currency moves, let's pivot. Let's talk commodities. Because this is where we see some truly dramatic shifts, especially in precious metals. And here's where it gets really interesting for anyone tracking, global stability, economic sentiment. Our sources flag some really eye-popping figures. Gold, for instance, just hit a fresh record high, soared above $3,500 an ounce.
Incredible.
Yeah, this huge surge is mainly fueled by strong expectations of a Federal Reserve rate cut later this month. Silver's right there with it, rallying strongly too. On the energy side, crude oil extended yesterday's gains. And here the driver is clearly geopolitical. Ongoing tensions in the Middle East. Specifically, Israel's recent strikes across Gaza, Houthi vows of retaliation. It's keeping that whole global energy backdrop extremely tense. Closer to Europe, policymakers are actively working, trying to close loopholes. They want to make sure Russian gas can't just be blended into supplies once that 2027 import ban kicks in.
A big strategic move.
Definitely. Towards energy independence. And lastly, copper. Often seen as a bellwether for global industry, right?
Yeah, Dr. Copper.
It rebounded modestly, but seems largely range-bound, caught between, persistent trade uncertainty and that mixed Chinese economic data we mentioned.
That record gold price, getting past $3,500, it's more than just a number. It's a really stark indicator of shifting market psychology. Now, while a Fed rate cut often suggests, potential economic weakness and triggers that flight to safety we talked about,
right.
This kind of surge points to something maybe deeper, a kind of market skepticism. It's not just simple risk aversion. It maybe hints at a growing bet that the Fed's actions might not be enough to really stabilize inflation, or perhaps that more economic uncertainty is coming despite any stimulus. Historically, gold's the hedge, right? Against inflation, against currency debasement. So its current rally suggests investors are bracing for something more complex than just a straightforward slowdown in recovery. It's a nuanced signal. It goes beyond just basic risk-off.
So it's almost like the market is saying, okay, yeah, a rate cut is probably coming, but what does that really tell us about the long-term economic health?
Interesting. And crude oil, you mentioned, it's a direct barometer of geopolitical instability. How quickly does the market typically react to events like those in the Middle East? And what are the immediate impacts beyond just, the price per barrel?
Oh, the crude market reacts with astonishing speed. Sometimes news of increased tensions or strikes in the Middle East can trigger price spikes within minutes, maybe even seconds. Traders are pricing in potential supply disruptions almost instantly.
Wow.
Beyond the immediate price jump, higher crude impacts inflation globally, obviously. Drives up transportation costs for everything, consumer goods, industrial components. It can even influence central bank decisions as they try to deal with that imported inflation. The EU's moves on Russian gas, though, that's different. That's a strategic long game.
Right. 2027 feels far off. It does. But closing those blending loopholes now is about building energy resilience for the future. Denying Russia potential revenue streams down the line, regardless of today's market swings. It's a stark reminder that energy security as well, it's climbed right to the top of many nations' strategic agendas.
Absolutely.
And copper. Staying range-bound despite some okay news, that's like a yellow caution light flashing. It suggests that while there might be pockets of demand, the fundamental drivers for sustained global industrial growth, especially from China, the biggest consumer, they still look a bit murky. It tells us the economic recovery, if there is one, is still pretty uneven, facing significant headwinds.
Absolutely. And these market signals, particularly in energy and industrial metals, they often dictate the kind of political leverage nations try to lose, which brings us perfectly to that often tense arena of global trade policy, where market power isn't just about dollars and cents anymore. It's about national strategy and, as our briefing suggests, some very firm stances being taken. The U.S. is certainly leading with a strong hand here. Treasury Secretary Bessent announced the administration is preparing a, quote, vigorous defense of President Trump's past tariffs for the Supreme Court. There is clear confidence these measures will be upheld, which signals maybe a potential continuity of aggressive trade tactics, regardless of who's in the White House. Secretary Bessent also revealed the U.S. is actively pressing Europe to join its efforts against India's continued purchases of Russian oil.
Right. Blending trade and geopolitics.
Clearly. And interestingly, Bessent dismissed China's non-Western leaders summit as, quote, largely performative.
Okay, that specific point. The U.S. defending past tariffs at the Supreme Court, that's huge. really significant because it goes beyond just one administration's policy choice. It actually touches on the constitutional authority of the executive branch to impose tariffs in the first place. Under what grounds?
Oh, okay.
If the court upholds them, it could really solidify presidential power in trade matters, potentially shaping U.S. trade policy for decades, and making it harder, maybe, for future administrations to just reverse course easily. It signals a hardening, I think, of the U.S. stance toward a more protectionist, strategically driven trade policy.
So it's not just about the tariffs on steel or aluminum or whatever, but the very mechanism itself. How tariffs can be used as a tool sets a powerful precedent. And that pressure on Europe regarding India's Russian oil purchases, that's a really complex layer of diplomacy, isn't it? What's the real strategic goal there? And what are the potential costs or risks for everyone involved?
Well, the immediate strategic aim is pretty clear. Constrict Russia's war funding. Further isolate it economically by cutting off major revenue from oil sales. For India, though, which has historical ties to Russia and, frankly, relies on cheaper energy, it forces a really difficult balancing act between its own strategic autonomy and its relationships with Western partners.
Tricky position.
Very. And for Europe, it's about aligning with U.S. foreign policy goals while also managing its own energy security and economic stability, especially given its past reliance on Russian energy. It's tough. Bessent's dismissal of China's summit as performative, that also speaks volumes, doesn't it? It's a narrative battle.
Right, controlling the story.
Exactly. The U.S. is trying to downplay China's efforts to build, an alternative global structure, basically arguing these alliances lack real economic or political clout, even as Beijing actively seeks to expand its influence. This isn't just trade policy anymore. It's a full spectrum geopolitical contest playing out.
It's a fascinating look at how trade really is a tool, maybe even a weapon, in the geopolitical arsenal today. So, given that firm U.S. stance, how are other major international players reacting? How are they navigating these increasingly complex trade waters? Are they aligning, resisting, trying to find some middle path? Well, we're seeing quite varied responses, each reflecting unique national interests, it seems. Brazil's President Lula, for instance, has called for a virtual BRICS meeting, September 8th, specifically to discuss the implications of these U.S. tariffs.
Okay.
That indicates a desire for a collective response from that bloc, suggests maybe a coordinated pushback. In Europe, Council President Costa explained that Brussels made a conscious choice. Diplomacy over outright escalation with Washington. They wanted to avoid additional risks, especially, he said, while their eastern border remains under significant threat. That's a clear prioritization of stability and security over an immediate trade fight. Meanwhile, Japan's chief trade negotiator Akazawa denied reports that Tokyo had agreed to cut tariffs on farm products. He stressed there's no gap in understanding with the U.S. over their trade discussions.
Careful wording.
Sounds like Japan is very carefully managing expectations and public perception.
What really stands out there's the spectrum of responses, isn't it? It kind of reveals the fragmentation maybe of global trade leadership right now. Brazil calling for a BRICS meeting. That's not just about tariffs. It's about asserting the collective economic voice of emerging economies, potentially forging alternative trade frameworks.
Challenging the status quo.
Exactly. Challenging that traditional Western-led multilateral system, suggesting a more multipolar future for trade, Europe's choice for diplomacy, while pragmatic, given the situation on its eastern border. It also highlights the vulnerabilities the trade-offs smaller powers face when they're caught between giants.
Yeah.
They're effectively buying time, prioritizing immediate regional stability over a potentially damaging trade spat with a key ally. And Japan's denial, that's a masterclass in diplomatic nuance.
How so?
Well, by denying reports while also affirming no gap in understanding with the U.S., Tokyo's trying to walk a very fine line, appeasing domestic agricultural interests, avoiding the public perception of giving concessions, yet signaling to Washington, behind closed doors perhaps, that talks are progressing amicably.
I see.
It's a really delicate balance, especially for a nation like Japan that relies so heavily on strategic alliances for its security.
That's a great example of how different players are calibrating their responses based on their own internal pressures and external threats. Very different approaches. Okay, let's turn our attention now to the geopolitical hotspots that are really creating those global ripples we talked about. The Middle East, unfortunately, remains highly volatile, and our sources give us a stark reminder of that.
Yeah, our briefing confirms huge explosions reported in Gaza City and the northern parts of the Strip, followed a series of Israeli strikes. So that signals a continuation of intense conflict there. And adding to this, tensions are significantly heightened. Houthi threats of retaliation are being reported, coming after the killing of some senior leaders in recent raids.
Right.
This suggests a really dangerous cycle of action and reaction that, frankly, shows no signs of stopping. And these events, they just underscore the deep, persistent instability in that region, which has immediate, tangible impacts far beyond its borders. Obviously, there's the devastating human cost, first and foremost. But those Houthi threats of retaliation, particularly after losing senior leaders, could very specifically target Red Sea shipping lanes again, like we saw before. Exactly. Disrupting global trade, potentially hiking insurance premiums for cargo, which ultimately affects consumer prices everywhere. We saw earlier how this feeds directly into crude oil prices, but it's much broader. It hits supply chains, investor confidence in emerging markets, even humanitarian aid efforts get complicated. From a diplomatic angle, this kind of escalation just makes regional de-escalation efforts far more challenging. It draws in external powers, complicates any push towards lasting peace. It's a potent reminder of how quickly a regional conflict can snowball into a global economic and political headache.
So, what does all this instability mean for Eastern Europe? For the ongoing conflict in Ukraine, where we also see these really deeply entrenched positions. Our briefing shows Russian President Vladimir Putin has reiterated his stance. Any sustainable settlement in Ukraine, he says, must address what he calls the root causes of the conflict and restore a balance and security.
Familiar language.
Yes, highlighting Russia's ongoing demands, their perceived grievances. On the other side, French President Emmanuel Macron confirmed discussions with NATO leadership. That's ahead of Thursday's Alliance of the Willing meeting in Paris. Ukraine's security guarantees, top of the agenda. And Macron specifically stressed that firm guarantees are a prerequisite for any meaningful progress toward peace.
The gap, the chasm between Putin's and Macron's positions, it's profound, isn't it? Putin's call to address root causes, from Russia's perspective, typically implies a demand for a fundamentally changed European security setup, one that guarantees Russian influence, limits NATO. It's a maximalist position. Macron's insistence on firm guarantees for Ukraine, that's about establishing robust deterrence, ensuring Ukraine's long-term sovereignty within a Western-aligned framework. That upcoming Alliance of the Willing meeting, it's going to be critical. It's an opportunity for a core group of NATO allies to signal their unwavering commitment to Ukraine, maybe through enhanced military aid, long-term security pacts, perhaps even discussions around future NATO membership.
Big decisions.
Huge. The challenge is crafting guarantees that are substantial enough to actually deter Russia, but without being seen as overly escalatory by other major global powers, like China, for instance. It's that delicate balance again, deterrence and diplomacy, aimed at shaping the future security landscape of the entire continent.
And beyond these immediate, very hot conflicts in the Middle East and Eastern Europe, we're seeing some really significant alignments among major powers in Asia, reshaping that global power balance. Yes, the Chinese President Xi met with President Putin. A meeting our source really underlines as a clear sign of the continued strength of Russia-China ties. Additionally, North Korean leader Kim Jong-un was reported to have traveled to China. That was ahead of Beijing's Victory Day parade. These aren't just minor diplomatic handshakes. They feel highly symbolic, strategically important.
Absolutely. What's truly insightful here is the strategic choreography. It feels very deliberate. The Xi-Putin meeting reinforces what many analysts are calling an axis of convenience, a partnership driven by shared geopolitical interests, a shared desire to counter perceived Western dominance. It's about more than just trade deals. It extends to military cooperation, coordinating diplomatic moves in international forums like the UN, and joint efforts to build that multipolar world order they envision. Kim Jong-un's reported visit to China, just before Beijing's big Victory Day parade, that adds another layer to this complex picture.
Has to.
It's a very clear signal of solidarity between two key players in that region. It reinforces China's role as North Korea's primary backer, its main patron. And it underscores the enduring challenge to regional stability, particularly for South Korea and Japan, and by extension, for the U.S. presence there. These visible strengthenings of alliances, they send a clear message about evolving global power dynamics, with potentially very long-term implications for everything from trade routes to the future of international institutions.
Wow. Oh, what an incredible deep dive. We've really traced the interconnected threads, haven't we? Global markets, trade policies, geopolitics, from currency fluctuations driven by whispers about economic data to commodity prices reacting instantly to geopolitical flare-ups and trade disputes shaping high-level diplomatic strategies. It really is all one complex moving picture. Every piece influences the next.
It absolutely does. And this deep dive, I think, really emphasizes how no single event truly occurs in isolation. Understanding these intricate connections, these often surprising links, rather than just looking at individual headlines, that's really the key, isn't it? To making sense of the world around us. It's about seeing the potential domino effect before the first domino even wobbles.
As we wrap up this deep dive, we do want to leave you with a thought to chew on. Considering this intricate interconnectedness we've explored today, from a strengthening dollar maybe hinting at specific Fed moves, to record high gold reflecting some deep market skepticism, and from tariff battles potentially becoming constitutional precedents, to shifting alliances in Asia redefining global power, how might just a single, seemingly minor, unexpected event, maybe in just one of these areas, trigger a disproportionate cascade of consequences across all the others? For instance, just thinking out loud, what if a major cyber attack temporarily shut down a critical global shipping route? How would that single event ripple through commodity prices, currency valuations, maybe even diplomatic alliances? And which connection, which ripple effect do you think would be the most surprising, the least expected? Something to ponder. Thank you for joining us on this deep dive. We hope you feel more informed and maybe ready to see the world's news with fresh, more interconnected eyes.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.